The United States and China have a complex trade relationship. For decades, this relationship was mainly cooperative. China supplied affordable goods, and the U.S. was a major consumer. This dynamic fueled economic growth in both nations. However, over time, imbalances arose. The U.S. trade deficit with China grew significantly. Concerns about unfair trade practices emerged. This tension formed the backdrop for the U.S.-China tariff war. In 2018, the Trump administration imposed the first round of tariffs on Chinese goods. This ignited a tit-for-tat exchange. Both sides escalated tariffs, and these actions disrupted global trade. The tariffs impacted businesses and consumers worldwide. The economic consequences of this trade war are still unfolding. The U.S.-China trade relationship is a critical factor in the global economy. Its future remains uncertain. Finding a path to a more balanced and sustainable trade relationship is crucial. This will require dialogue, compromise, and a commitment to fair trade practices from both sides. The U.S.-China trade war reached a fever pitch in April 2025. The U.S. announced a significant escalation of tariffs on Chinese imports. These new tariffs targeted a wide range of goods, including electronics, clothing, and machinery. The tariffs were a major blow to Chinese exporters, and they also raised prices for American consumers. The April 2025 tariffs were met with condemnation from many quarters. Business groups warned of job losses, and economists predicted a slowdown in economic growth. Despite these warnings, the Trump administration pressed ahead. They argued that the tariffs were necessary to protect American jobs. They claimed that China was engaging in unfair trade practices. The decision to impose further tariffs marked a significant escalation in the trade war. It signaled the Trump administration's determination to take a hard line with China. This decision had far-reaching implications for the global economy and raised tensions between the two superpowers. China responded swiftly to the U.S. tariff hikes. They imposed retaliatory tariffs on American goods. These tariffs targeted key American exports, such as soybeans, automobiles, and pork. This retaliation was designed to inflict economic pain on the U.S. It also aimed to pressure the U.S. to back down from its aggressive trade policies. Beyond tariffs, China explored other avenues to mitigate the impact of the trade war. They sought to diversify their trading partners, strengthening ties with the European Union, Southeast Asia, and Africa. China also ramped up domestic consumption to reduce their reliance on exports. These measures aimed to build a more resilient economy. China's response to the trade war demonstrated its resolve. They were not going to be bullied by the U.S. They were willing to endure short-term pain for long-term gain. China's leaders believed that they could weather the storm and were confident that their economy would emerge stronger in the long run. American consumers felt the pinch of the trade war. The tariffs led to higher prices for a wide range of goods. Everyday items like clothing, toys, and electronics became more expensive. This put a strain on household budgets and fueled inflation. Consumers started to change their spending habits. Some consumers began looking for cheaper alternatives. They bought generic brands instead of name brands. They shopped at discount stores more often. Others delayed major purchases, putting off buying new cars or appliances. These changes in consumer behavior had a ripple effect throughout the economy. The trade war also created uncertainty for consumers. They were unsure how long the tariffs would last. They worried that prices would continue to rise. This uncertainty made consumers less likely to spend. It weighed on consumer confidence. Section 5, Business on the Brink, Uncertainty and Disruption. The U.S.-China trade war created significant challenges for businesses. The tariffs disrupted global supply chains. Businesses faced higher costs for raw materials and components. Many businesses had to raise prices. This made them less competitive. Some businesses were forced to lay off workers or even close their doors. The trade war also created a climate of uncertainty. Businesses were unsure how long the tariffs would stay in place. They didn't know if the situation would escalate further. This uncertainty made it difficult to plan for the future. It also discouraged investment. Small businesses were hit particularly hard by the trade war. They often lacked the resources to absorb higher costs. They had less leverage to negotiate with suppliers. Many small businesses struggled to cope with the disruption. Some were forced to close their doors. Section 6, A Global Economic Shudder from Slowdown to Recession. The U.S.-China trade war sent shockwaves through the global economy. It contributed to a slowdown in global economic growth. The International Monetary Fund, or IMF, downgraded its growth forecasts. The IMF warned that the trade war was a threat to global economic stability. Other international organizations echoed these concerns. The trade war also fueled uncertainty in financial markets. Stock markets experienced volatility. Investors were concerned about the impact of the trade war on corporate profits. They were also worried about the potential for a global recession. This uncertainty made it more expensive for businesses to borrow money. The trade war highlighted the interconnectedness of the global economy. When two of the world's largest economies engage in a trade war, it has repercussions for everyone. It can lead to higher prices, job losses, and slower economic growth. Section 7. Political fault lines, domestic and international tensions. The U.S.-China trade war exacerbated political tensions. In the U.S., the trade war divided businesses and consumers. Some supported the tariffs. They believed that they were necessary to protect American jobs. Others opposed the tariffs. They argued that they were harmful to the economy. The trade war also strained relations between the U.S. and its allies. Some U.S. allies felt caught in the crossfire. They were pressured to take sides. This put a strain on alliances. It also created opportunities for China to strengthen its relationships with other countries. The trade war underscored the growing rivalry between the U.S. and China. It highlighted the challenges of managing this complex relationship. It also raised questions about the future of the global order. Section 8. Seeking a way out. Negotiations, stalemate, or breakthrough. Despite the escalating tensions, there were efforts to find a negotiated solution to the trade war. The U.S. and China engaged in several rounds of trade talks. However, progress was slow. The two sides remained far apart on key issues. There were periods of optimism followed by setbacks. One of the main sticking points in the negotiations was the issue of intellectual property theft. The U.S. accused China of stealing American intellectual property. They demanded that China take steps to protect American intellectual property. China denied these allegations. They resisted U.S. demands to change their industrial policies. Another obstacle to a deal was the lack of trust between the two sides. The U.S. and China viewed each other with suspicion. They doubted each other's intentions. This lack of trust made it difficult to reach a compromise. Section 9. The future of global trade collaboration or conflict. The U.S.-China trade war raised important questions about the future of global trade. It highlighted the tensions between free trade and protectionism. It also underscored the challenges of managing trade relations in a multipolar world. The outcome of the trade war will have lasting consequences for the global economy. One possibility is that the U.S. and China will eventually reach a trade deal. This would reduce uncertainty in the global economy. It would also signal a willingness to cooperate on trade issues. However, even if a deal is reached, it is likely to be limited in scope. It is unlikely to address all of the underlying issues in the U.S.-China trade relationship. Another possibility is that the trade war will continue to escalate. This would be a negative scenario for the global economy. It would lead to further economic damage. It could also increase political tensions between the U.S. and China.